Welcome to Stock Charts Trading. Today we're going to be talking about the Elliott Wave. We have a 1, 2, 3, 4, 5 legs up, and then the ABCD pattern down. Every stock chart is based off of this formation, but inside of each one of these formations, like leg 1, it probably has a smaller Elliott Wave motion. In a leg 2 pullback, that's a consolidation pattern, and so it's going to show an ABCD pattern. So every time it has an impulse wave, it would be an Elliott Wave that you would count. Every time you have a pennant sideways pattern, harmonic pattern, you would have a consolidation pattern. So really we see more things like this, right? We see up, then pullback, then up. And of course it messes with our mind because we're like, we're making money, we're losing money, we're making money, we're losing money. And that's why as a trader, I was a nervous wreck, right? Because I would get into a trade, it would go up, it would go down. I would put a tight stop right here and it would go a little bit lower and then it would continue the right way and make huge amounts of money. But I was already out of the trade with a loss. And so once you start to learn that leg 1 is a bounce off of the lowest low, and then you have a small pullback, which is a consolidation, which is waiting for all of that energy to combine together so you can get this big run. And disheartening as it is, even with this big run, you're going to get pullbacks. You're going to lose some money and time while you're waiting for this pullback to work out. At this high, you're at euphoria. You're making money. You're the smartest person in the world. And at this low, you don't know if you did the right thing. And depending on what time frame you're trading, it could be a long time from this high to where it breaks out and starts making you more money. So now that we broke down that the Elliott Wave has 5 legs, and in those 5 legs, you're going to get some pullbacks. And in those 5 legs, you're going to get some pullbacks. I want to take a look at this lower time frame. If this is on a 1-day chart, then this would probably be showing like an hour chart. And this very sketchy back and forth would show like a 10-minute chart. But what I want you to notice is what happens on the Elliott Wave and why the zone channel works. So if we take both of these C points and draw a line across, we have a good support line. But if we take the bottom of these three leg 2s and draw it across, it helps us find that entry zone, not just the exact number of what it has to hit. Okay, so we had a downtrend, then we had a breakout over here. So we used this support, this lower support, and then the higher support and resistance line, drew our zone channel over, entered into the trade here, and the line zone kept on coming. So now I'm going to zoom in on this. As price came down into the channel, it was giving me half of the trade, right? This is support. So we should get a bounce off of this. But before I enter into this trade, I have to break my resistance. So you can either draw a line like this, or on the Heiken Ashley, you can just follow the tops of these candlesticks like I was doing here. And this saved me from getting into a bad trade. Yes, I get into lots of bad trades, but this will help eliminate some of the trades that we take. So now what? Well, I take the old highs, take the support here, duplicate that line up on my channel using these 4 candlesticks as a resistance point and wait for price to come back into this zone. So right now we've entered into that zone. And so we're going to take and put an entry trade at the bottom. And you see as price breaks below this candlestick right here, it will get us into the trade. So right now, this is our support level right here at the bottom of this candle. So right now at the bottom of this candle is our entry point, which is a support level. Up here is our downward resistance, and we've entered into the trade. So now what? I've got to find a target. Put my stops on. I'm going to just use this single candlestick, bring my Fibonacci down. And the way I've set up my Fibonacci is so that I have a Fibonacci extension for a target and a Fibonacci extension for my stop. Again, here's kind of the layout of this trade. But let's take a look at this past move as we wait for it to work out. All right, so here we have a tight impulse wave up. Once we broke lower on that impulse wave, what did we do? We got into consolidation. And that's what you have to do when trading is consider, are you in an impulse wave or consolidation? But the most important thing always first is, what is your trend? All right, so again, I started this trade by this cluster here. Okay, again, I started this trade because I broke this support level. I used this cluster to find this angle. It gave me an entry point right here, but as you can see, we're breaking above. So I don't know if this old high is going to be a good enough resistance level to push down price. But that's why I put my stop a little bit above this old high. Why? Because we know once we start making higher highs, trend reversal. And as you can see, for right now, price has come into that and is holding just a little bit below. If this price does fall down from here, then I'll need to adjust my channel zone. If price breaks above here, then I'll need to place a new channel zone going to the upside. But based off everything we just talked about, this is the impulse leg down. Here's the consolidation, and we should be able to anticipate at least another leg down for an ABCD pattern or going into leg 3. Okay, we've broken above, so I'm going to use this old channel up here, duplicate it, bring it down to where we are right now. Use these bottoms, support, 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 and when price comes back into this channel, I'll enter the trade to the upside. While we wait for this oil, let's go over to CL. Right here, you can see we're up against this channel zone, and we just broke below, so now we're expecting for it to fall off, pull back into resistance, then go lower. Here we are, using these highs for resistance and support. So we're waiting for price to come back up, and then we'll enter to the trade to the down. While we're waiting, let's look at the charts. This is an impulse wave. Here's an impulse wave. Here's an impulse wave. Maybe an impulse wave. Consolidation, that back and forth motion that whipsaws you in and out of trades. What do you see? You see 3 flag patterns right here. So what do we have right here? We have an impulse wave down, and that's why we can anticipate a little bit of a pullback here. Once it breaks this resistance, we should get a nice little pullback into this zone. While we wait, I want to look at this one more time. So these impulse waves have the biggest motion, right? To the upside. And so what happens after an impulse wave is you get that ABCD pullback correction pattern. And so that's where Fibonacci comes into play. You can use the outside channel, but you can also apply a Fibonacci. So if we go from the bottom and we go to the top, we go from the bottom to the top, we go from the bottom to the top, you can see that each one of these pulls back to a 38% retracement on the Fibonacci. And what you have to be careful is, it looks like some of these might have pulled back even a little bit lower down to a 50 or 60 Fibonacci retracement. And so you've got to anticipate, could this come all the way down to my zone? So am I a zone trader or am I a Fibonacci trader? You know, you kind of got to make that off of your wins and losses and also your mental mindset comfort level. I think a lot of times we look at things like this and say, oh, look at all that money I would have made. And so then you go in and you start trading Fibonacci 38 level after an impulse wave, and maybe it works and you're like, oh, I was right. All right, here we are. We up into the channel. I got to stop for a minute. Let's sell one short. Okay, as you can see that I have lost $400 because I was talking instead of trading. I was trying to put my stop on there. I entered the trade once this price broke this lower candle. I got into the trade right here once this candlestick broke lower. I was trying to put my stop in, and price shot up really high. Now, the good news is I have this old support level, which, say it with me, old support becomes new resistance. So let's see what happens. So if price holds right here, I'm going to enter into the trade to the downside to add to my already losing trade, dollar cost average, and see if I can make some of that back up. So I got into the trade again. I have 2 shares on, and I'm going to use these high parts of the candlestick. I'll use this high right here and these lows to build my consolidation channel zone like that. And so this is our highest high in this little breakout. So what I want to do is set my stop just above this. So that way, if it goes even higher, then I know it's in an uptrend, right? Higher highs make an uptrend. Lower highs make a downtrend. So I know as long as price stays below this consolidation that I will be safe and my money will be protected. All right, so I'm going to put my Fibonacci on it. And as you can see, there's this little support and resistance right here. And then we have these highs back here, which made a double top with these 2 candles. I'm on the 33 I'm on the 330 tick chart here on the SPY futures. And so again, I use a extension for my stop and an extension for my target. That would be target 1. And then I'll probably use this lower zone right here off of these lows as my support for my second trade. All right, so you can see that this price broke out of my channel, but it did not make a higher high as of yet. So I'm going to slide my channel over to here using these old highs as my support and resistance. Okay, now let's just take a look at what the pattern that happened. So we had an uptrend, leg 1, a pullback, leg 2, an uptrend, leg 3, which was longer than leg 1, pullback, leg 4, into a leg 5, which came into our resistance zone. After that impulse wave, consolidation, or reversal. I hope reversal. Okay, so I have a trailing stop, but my trailing stop is not to keep profits. For me, trailing stop is to preserve my capital. Do you see how far my trailing stop is away from the actual candlesticks? And so you can do one of two things with Heiken Ashi is you can follow the bottom of each of the candles, which that's a whole lot of movement, or you can use a trailing stop, which should give you more breathing room. But I see a lot of people are so worried about losing profits, they keep their trailing stop too tight, they get out early, and then price keeps running in the right direction. All right, now I'm back up into the zone, so I'm going to take another trade to the downside, right off the bottom of this candle. I'm going to move my stop down to this trailing stop, which also identifies with this channel zone that I made. Okay, so I used my Fibonacci, and I just actually used this little cluster of candlesticks. I used the bottom as support, I used the top as resistance, and then I put my Fibonacci on it, giving me this extension right here. I'm gonna do a video on that later. It's a 1 candlestick Fibonacci target, and it works like magic. And then you can see I have my other target down here on this lower support level, which I'm actually going to change because if I'm counting lows, low, 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 low. And so this identifies more with the potential move to the next low. And this is why I like trailing stops so much, because right now I'm in this trade for nothing. So if it comes up and breaks out to the upside, I haven't lost anything and I'm out. Why? Because here's a high and right here's a higher high. So after all that, I started with about $1,000. I'm down about $300, $750 after making a huge mistake, not being able to get my stop loss in time. And so I'm going to keep on trading this pattern. As you can see, back to our oil futures, price never came down into this zone. So we were fine to trade the SP 500 because this was not in the right place for us to take a trade. So get some rules, get some understanding of the movement, draw some lines, do some paper trading, try these things out. Are you in an impulse wave? Are you in a consolidation? Are you in a channel? Where are you taking your trades? Where are you taking your targets? Ring that bell. I'll keep you updated on the next post.